Live from Bloomberg's world headquarters in New York, I'm Shanali Bassick, and welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. And of course, today I'm joined by Bloomberg Intelligence senior analyst Eric Balchunas, one of the main authorities on crypto ETFs. I bet that's not a job you thought you would grow up to have.
No, let's just say I'm learning a lot. But, you know, ETFs to me are like bridges between the traditional finance world and the crypto world, and we go back and forth on the bridge all the time now.
And it's a big week, of course. We will talk much more about it in just a second here because investors are eagerly waiting to learn the fate of ETF applications for both Ether and Solana. And this is as SIBO files a request to list Solana funds by 2025. And we're going to talk to Bitwise's Katherine Dowling about how she views the chances of Ether ETF approvals this month. We're also going to discuss the price swings in Bitcoin as Mt. Gox fallout and fund flows cause volatility. Taking a look at the snapshot of the market first here because, of course, Bitcoin seeing 438 million in inflows in 2 days, and you are seeing a rebound in the market to the tune of about 2.5% today in Bitcoin. Ethereum also gaining to the same degree, and Coinbase up almost 2%, snapping 4 days of losses. MicroStrategy up for a second day, up more than 1% as well. And the recent drop in Bitcoin prices stems from the concern around the Mt. Gox bankruptcy, which happened a decade ago. But the firm is now returning about $8 billion of Bitcoin to creditors in stages, spotlighting the potential for a wall of supply to come into the market, and some jitters have been showing up in pricing. Bloomberg's Olga Karif joins on this now. And if you could explain the difficulties here that the market is facing with this slew of Bitcoin coming into the market because of Mt. Gox.
Sure. So Gox used to be the world's biggest Bitcoin exchange. It was based in Japan, and all of the early Bitcoin OGs had money on this exchange. And then in 2014, it went bankrupt. Some Bitcoin disappeared, and people have waited for 10 years to get their coins back. And finally, just a few days ago, the trustee overseeing the bankruptcy of Mt. Gox announced that he started repaying Bitcoin and Bitcoin Cash coins to some of the creditors. And, a lot of the creditors are expected to get their repayments by the end of October. I talked to some creditors. They haven't gotten the repayments yet, but, they're coming. And so a lot of the investors are worried about this billions of Bitcoin and Bitcoin Cash all of a sudden dropping onto the market and potentially pressuring prices.
Olga, I'm really curious about the nature of some of the holders here. You think, for example, the country of Germany, and you wonder whether some of the people who are receiving claims here would be willing to put money back into the crypto markets or not.
So the claimants in the Gox proceeding. So they are mostly, so a lot of them are funds that have bought up claims of smaller creditors, but there are still some creditors as well. And the Mt. Gox repayments are happening at the same time, as you mentioned, as the German government is selling their cachet of Bitcoins that they have about, over $2 billion worth of Bitcoin that they received by earlier this year by closing off some illegal activity in the country. And so they're starting to sell their Bitcoin as well, and this is pressuring prices as well. So a lot of supply concerns in the market right now.
Olga, we thank you so much for keeping an eye on the market, and of course all of the sellers. I know you'll be talking to the buyers as well. That is Bloomberg's Olga Karif. And we're going to turn to the latest, as we've been talking about, on the ETF filings under consideration by the SEC. And Eric has been so ahead of this story. If we think about what is around the corner, what is your expectation for an approval of an Ethereum ETF? And also, what kind of demand can you expect?
Yeah, so I think we're going to get response and guidance from the SEC sometime this week. And everything's done, basically. We're just waiting for the formality of the SEC to say, okay, issuers, here's our game plan. Send in the final documents by next Tuesday, and you can launch on Thursday. We're that close to the finish line. We just need to know, what the SEC says. So we're waiting to hear that. If you ballpark estimated, I would say next Thursday is probably a reasonable estimate for when they'll launch. How much money will they take in? Look, I look at silver and gold. I look at Ether and Bitcoin in other parts of the world. I estimate 20% of the assets. So, you know, a little bit of a sidekick, to be honest. I don't think Ether is going to really grow much bigger. I think Bitcoin is the stud crypto asset. It's easy to explain to, you know, any investor. It's digital gold. Ether's a little trickier. It's harder to explain what it is, what the value is. Maybe I'll be wrong. Some of the Ether people think I'm underestimating it. They tell me all the time. But based on those other paradigms, I would say Ether would be lucky to get 20% of the 60 billion that the Bitcoin ETFs have gotten.
It's fascinating because you're seeing this at the same time that people are starting to talk about the next ETF for crypto, Solana being among the top of that list. And if you think ETFs for Ethereum would be a sidekick, why even look to the Solana ETF right now?
Yeah, because if you are first, you're probably going to get a nice payday. So right now, these Solana applications, in my opinion, are basically call options on a Trump victory. Because if Biden wins and we get like Gensler Part 2 or somebody like Gensler, they're not going to approve these. It's a long story why, but they're just probably not going to. Trump wins, let's say he appoints someone like Hester Peirce or a more libertarian chair, well, anything's possible. So there's 240-day clock that just started that will be March 2025. So the election is between now and then. So this is a little bit like just a flyer, a call option on what if there's a change at the White House, and we'll see what happens. If there is, then we're looking at maybe more coins even beyond that. If there isn't, I think we're kind of locked into these two coins for a long time.
Something to circle your calendars for March of 2025. Eric will be sticking with us, but for more, we're also joined by Bitwise Chief Compliance Officer Katherine Dowling. And if you think about what we're seeing in the market right now, it's such an interesting time to think about all of these new products that are coming to the surface around the crypto community because of the weakness you're seeing in Bitcoin. Katherine, how do you think about this as an issuer? You're on one hand seeing a lot of interest in the cryptocurrency really waning, but new products coming to launch. What's the dynamic?
Yeah, thanks so much for having me. And we've actually dialogued with the SEC about the possibility of what's coming down the pike with new products. And it is interesting, as Eric pointed out, some of those new products may have to wait on a new SEC chair if that comes to turn in January, because otherwise I think it's going to be a really long haul to get some of these products out in the market, given the history we've had with getting these products to market and the fact of not having futures trading in some of these potential products. But it's an active dialogue, and I think our communication with the SEC about the prospects for these products has actually been quite welcoming.
That's fascinating. And if you think about the other thing Eric was pointing out was there's the SEC as one part of things, but then there's the retail investor interest or even institutional investor interest. How do you see investors really rallying around the idea of Ethereum? Do you find it a harder sell than Bitcoin?
It's definitely a more nuanced sell, but I don't think it's a harder sell. I think it's got its own market structure that is explainable, not as easily explainable as the digital gold qualities of Bitcoin. You know, Bitcoin is the big leader, right? But we're 6 months behind here, and we're close to a launch of the spot ETH ETFs. Chair Gensler said it's going to be sometime over the summer. You know, everyone has a different definition of summer. It's been a little bit of a long, hot summer for the issuers waiting for that. But we're seeing in the S1 amendments that are filed that there are fewer and fewer issues that are being vetted back and forth between issuers and the SEC. So that points all signs in the direction that we are close to the finish line on the launch.
And let's talk about the marketing of Ether, right? So let's say you're talking to a cousin or your uncle or aunt, and you're trying to explain Ether ETF. You just told them Bitcoin is digital gold. What's the buzzword or the sort of four-word marketing sort of slogan that you can give Ether where someone will be interested in it?
We try to explain Ether, and we have at heart Bitwise is a research institution. And what our research team does day in and day out is they create kind of easy to digest explanations of Ether, of these products, and what impact they're having on the technological furtherance of moving money over the internet. And I think once you break it down and explain that, it's not just a currency. You're not issuing another currency so that you can just go buy coffee at Starbucks. These are technological innovations, and these are businesses that are being run on the blockchain. So once you get into the explanation of that these are businesses and liken them to the evolution of the internet, I think it's more easily explainable and something that folks can grasp that maybe have no background, or even folks that do have background or have been investors in Bitcoin and are looking to see, okay, what's the next diversification move we can make? So those are conversations that you can step function and explain. And we have a lot of research and kind of easily digestible items on our website that I think help investors every day.
And we're going to have a race, right? We had the Bitcoin ETF was, I think, 11 or 10 ETFs launched in the same day. That's rare. We're going to have it a part two. You're going to be up against Fidelity and BlackRock. What is your plan to stand apart and get out early with assets and flows in really one of the most competitive matchups that we've seen in a while?
Well, first, it's great for investors that there are a number of us coming out at once, if that's how it plays out. And it's looking that that's the way it's going to be directed. And second, from our perspective, Bitwise, we set ourselves apart as the crypto asset specialist. We've been doing this for years. Yes, some of the other names you've definitely heard of, but we have been trading and we have been working just within crypto as specialists for many years now. And a lot of the behind the scenes operational mechanisms are really important to the trading of these products. So it's important to kind of look behind the names and see experience and who's been out there and who's been working with some of these traders in that operational mechanics behind the scenes mechanisms. Those are very important. And ultimately, the investor will win when you keep the trading spreads tight, and you can do that through that specialty behind the scenes.
Katherine, another thing I'm curious about is something that you put in your notes. This is the idea that someone needs to launch a new ETF that's 10% Ether and 90% tech stocks. Will you be the person to do it? And how soon could you get it done?
I can't speak to our future products, unfortunately, but we are definitely looking at what's going to be good for the investors. And we, every day, Bitwise folks are talking to institutional investors about what their clients are asking them for, what they're looking for, and it's an ongoing conversation. And we always look to be ahead of the curve and figuring out what's next and what's important for the investors for their diversification needs.
Katherine, we thank you so much for your time. That is Bitwise Chief Compliance Officer Katherine Dowling, of course, at a hot moment for this market. Now, coming up next, we're going to talk to Securitize CEO Carlos Domingo. He's going to talk about the hundreds of millions of dollars in assets flowing into his company's tokenized treasury fund. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. BlackRock's Institutional Digital Liquidity Fund, also known as BUIDL, has become the first tokenized money market fund to reach $500 million in supply in under 4 months since inception. BlackRock launched the fund through the firm Securitize, and we're joined now by Securitize co-founder and CEO Carlos Domingo. And still with us, Bloomberg Intelligence's Eric Balchunas. And a lot of things at play here, of course. Carlos, when we talk here about this idea of money market funds becoming more tokenized, why do you think this one has brought in so much money so quickly?
Well, if you think about where the market fit for tokenization has been, I think the first asset class that was successfully tokenized was the dollar, right? So stable coins, which are essentially tokenized dollars, it's at 150 billion plus size. So I think that the next, more natural asset class to do that was the closest thing to a dollar, which is treasuries, right? So money market funds are basically short-term treasuries and repurchase agreements, which is what the BUIDL fund is. And I think the reason this has been successful, obviously, one of them is because it's BlackRock. So it's issued by the largest asset manager and the most reputable in the world. But I think the other part is that it's really a full on-chain, tokenized money market fund where the tokens are issued on the public Ethereum blockchain. They're transferable peer-to-peer across whitelisted institutions. They have instant redemption through selling it through Circle using USDC. So it has a lot of features that make it not just like a tokenized money market fund, but something very useful for the crypto economy.
Well, the other thing about this, too, is that if you think about the people who buy even normal way money market funds, a lot of people are considering the prospect of a rate cut as early as September, the market increasingly believing so. How do you think that will impact the product? Do you worry that we are kind of looking at a boom time here, but facing a plateauing later on?
Well, obviously, the money market funds are more attractive when you're in a high interest environment like we are now. I think even if you get a rate cut, you still get a good return. I think it's 5.3 now. So even if it goes down to like 5%, it's still a good return. And it's also a very safe asset class, right? So you're basically investing in treasuries from the US government. So I think a lot of people will continue buying and consuming money market funds, even if interest rates go down. And then what I think will happen is that the next kind of natural asset classes that give you a higher yield and that are still, safe, like, private credit and other type of funds will kind of emerge and start growing from there.
And so I was just in Europe and I was told that tokenization is coming for ETFs and they're going to be the next big thing. And I got to make sure that our ETF analysts don't need to start analyzing tokens soon. But here's my question is, ETFs, right? You want exposure to high yield debt, treasuries, S&P. You log on to your Schwab account or whatever. You hit buy, and then you own it. It costs nothing. It was a frictionless transaction. I just don't see what's disruptible there. I find that tokenization of stuff that ETF covers could be a solution in search of a problem. Am I missing something?
Well, you're absolutely right. Like, if it's tokenization for the sake of tokenization, just use a different ledger to represent the securities. It doesn't add any value. And national market securities like ETFs are pretty accessible today. I think that the idea of tokenizing ETFs or other asset classes is to actually make them interact with the rest of the crypto economy, right? There is like, close to $2 trillion of assets and protocols and lending protocols, automated market makers, etc., that do not interact at all with the TradFi version of the products, right? So tokenization can actually bridge these two worlds and bring TradFi assets into the crypto economy.
And speaking of, so one area I think it could add a lot of value is things that are harder to get, like, I don't know, farmland or art or private equity, where you cannot ETFize those things. Could we see tokens that allow retail investors get access to that? And could that pass through regulators?
So you're absolutely right. So one of the theses of tokenization is basically that it makes the fractional ownership and the accessibility of the asset easier. So we've actually, the first kind of like major asset manager that worked with us was KKR, where we did a tokenization of a private equity healthcare fund. That was exactly the same idea that you mentioned, Eric. I think that in terms of regulation, it all, funds can be registered to be sold to investors, right? So there's something called the 40 Act funds that are basically registered funds that individual investors, even retail, can access. Of course, these days, because we use blockchain as a ledger to represent the securities, it's a bit like a lengthier process than it should be with regulators to register these funds. But hopefully those barriers will disappear over time, and we'll see tokenized asset classes for retail people accessible.
It's interesting, Eric's question, because you have a lot of private equity, private credit firms, other firms that are looking at private assets largely to go to retail investors. And I'm wondering, Carlos, if you think that the effort to tokenize them can also fuel the ability to lower fees on a lot of these products as well, given the intense demand there is from that private asset industry to attract this kind of money.
So certainly tokenization should be a cheaper way of managing a fund, right? Because if you think about, for instance, what we're doing with the BUIDL fund from BlackRock, when we issue dividends, we do just one blockchain transaction, and we issue millions of dollars of dividends into all the wallets of the holders of the tokenized money market fund. We do instant redemptions without any manual intervention, etc. So and there is also less, if you want, reconciliation errors, because you use a better ledger that is a blockchain, essentially. So I certainly see lowering fees as an important thing. But I think that it's always more important when you bring new use cases and new functionality to a security, because it's easier to lend against it, or it's easier to trade it than just like making it cheaper. I think always innovation happens when there's new stuff happening, not when you just make something existing cheaper.
Securitize co-founder and CEO Carlos Domingo, we thank you so very much for keeping an eye on this part of the market for us. And coming up, Bitcoin seeing a resurgence of sorts, inflows as people start buying the dip. More on the flows up next. This is Bloomberg. Crypto digital asset projects saw inflows totaling $441 million in the week ended July 5th, according to CoinShares, and that's the first week of inflows in a month. We saw another $400 million poured into Bitcoin ETFs in the past 2 days. Eric, what are these new inflows? What do they mean? Where are they coming from?
Yeah, well, if you look at the tickers, I mean, almost all of them took in money the past 2 days. But I was more interested in the 20% drawdown over the past month. How strong are these hands? And I got to say, they took in net inflows. Now, there was a couple weeks and days where you saw some outflows, but over that drawdown, it did not shake people out. ETF investors, in my opinion, I try to tell people this all the time, they're stronger hands than people think. They typically have this as a small allocation. It's not a big deal to them. Their main investment's the S&P. So they're just going to be more tolerant of these drawdowns. So it's a good sign that they've kept the net flow year to date at 15 billion, even during that drawdown. So if you can hold the line during a drawdown, that number should go up the next time there's a rally.
Eric, we thank you so much for being with us today here. It's pretty incredible. You have Bitcoin ETF investors really still buying the dip, even though you see really a $15,000 change in the price of Bitcoin from its peak. That's all for Bloomberg Crypto. For Eric Balchunas, I'm Shanali Bassick. This is Bloomberg.